Welcome to Season 2 of Wattle Partners Market Thinkers series. This whole series is dedicated to investment themes. We'll be focusing our discussions on some of the most important technological, demographic or societal trends that are occurring around the world. We're speaking to experts in each sector, spanning financial markets and the broader industry, as we seek to understand these emerging trends or themes more. Investing in global themes over the last 30 years has really paid off for investors. Every month when Drew and I run our investment committee meetings, we have a list of themes that we're trying to obtain exposure for our clients. This week's session, we'll be covering the most interesting topic on our agenda, cryptocurrency and blockchain. Joining us is Henrik from Apollo Capital and Michael Armitage from FundLab. FundLab is a consultant to Apollo, helping investors understand where Henrik or Apollo's cryptocurrency fund fits in with their portfolio. Welcome, Henrik. Welcome, Michael. Welcome, Drew.
Thank you.
Thanks, Jamie.
Thank you for having us.
No problem. Unless you've been living under a rock for the past few months, you would know that cryptocurrency, including Bitcoin, has been growing in popularity from traders and professional investors. But cryptocurrency is more than just Bitcoin and potentially represents a whole new view to the world of traditional finance. The top two currencies alone now represent over $1 trillion in market cap. Such a new field, very, very new. What kind of backgrounds do you two guys have to make you an expert in cryptocurrency? Maybe we'll start with you first, Henrik.
Yeah, sure. So my background is in traditional finance. I have a quite technical background. I worked as a quant analyst, which is financial mathematics, at the derivatives desk at an investment bank in my home country of Sweden. I also been on the buy side of a quant hedge fund based in Singapore, and I spent some 10 years on Wall Street on the institutional equity sales side. So most of my career before I entered crypto was in traditional finance, sort of in the stock market and in both in technical buy side, sell side.
Yep. So running money, essentially you've run portfolios most of your life by the sounds of it. When did you first see crypto? When was your first experience, the first day that you fell in love with this new currency?
I was around 8 years ago where Bitcoin in 2013 moved from around $100 in the beginning of the year or mid-year to over $1,000 at the end of 2013. That was it was one of the first big waves in the crypto markets, and that caught my interest, and I started learning more about Bitcoin, the underlying technology, blockchain technology, and really fascinated me. I think coming from that combination of a quite technical background with financial markets, I think that's a perfect combination to get into to crypto. And then later Ethereum was launched, which was the next big innovation after Bitcoin. So then the pace of innovation in the field really heated up.
Is it common for people involved in kind of, we'll call it digital currency or digital assets, come from a finance background or tech, or a bit of both, or just anywhere?
I think it's changed over the years. I think in the early beginnings, Bitcoin got started 12 years ago, and at that point there was a very small group of people, mostly kind of a fringe group of libertarians in the States that were interested in Bitcoin and crypto, and then sort of it moved more to cryptographers, people interested in that kind of very technical field. And then I think from there on it moved to more finance people and capital markets people, and today I think it's much more broad, and you even have adoption from not only retail investors but also big corporations and traditional fund managers.
Right, and you, Michael, what's your background?
My background is primarily within derivative trading. The first 20 years of my career I spent really in derivative trading and working within hedge funds. My, I guess, evolution or my downshifting as I moved to Australia in 2010 has been more focused around consulting, but primarily always around portfolio construction and portfolio management or risk management. The main thing about crypto that grabbed my attention, as you get underneath the hood, is the understanding or maybe the outlook that the technology is just much more bigger than what the surface story really is around price activity.
Sure.
But for me, being an options trader, it really represents one of the biggest convex trades that's available, in my opinion, in terms of potential upside versus what the maximum downside would be. So from that context, if that's led me to really look at a wide set of managers. But luckily in Australia here, you've got somebody like Henrik, who's been in this space for a long time and quite successful.
Is that a kind of a good place to start, stepping back and going, is cryptocurrency the right word for the asset class? Is it digital assets? Does it confuse people? Everyone will talk about the volatility in different currencies, but is that the way we should be looking at it?
Yeah, I think that's a good question. I think when we talk about currencies, people immediately think about that medium of exchange, but I think the crypto space is so much wider than that. So we like to call them crypto assets or digital assets because there are a lot of other functionalities than just the medium of exchange. And medium of exchange is probably not the best use case for many of the crypto assets out there. There's something called stablecoins, which we think is suitable for that medium of exchange, but Bitcoin, and I'm sure we'll get more into this, is more like a store of value, and other crypto assets have different functions. So we think the space is bigger than the currency use case, if you like.
Is it worth staying there and looking at Bitcoin and why it was created originally?
Yeah, for sure.
Does that give context to the sector, or is that too specific about Bitcoin?
I mean, Bitcoin is still the biggest asset, so it makes sense, and that's where it all started, right? But I think in the decades before Bitcoin was created in 2000, first proposed in 2008, and then launched in 2009. I think in the decades before that, there were some people who tried to create digital currencies, if you like. But they were all centralized, and they were prone to manipulation, and they could be shut down. But Bitcoin really created something that was decentralized. So that was one of the big innovations with Bitcoin, and the purpose was to create something that was independent from, say, governments, from politicians, from central banks, and that's really what we have with Bitcoin. So that was a very important innovation. It's also a scarce asset with a fixed supply, which was very important and still is. So those are some of the interesting characteristics with Bitcoin, which is currently mostly seen as a digital store of value, as a potential store of value, we should say, because it's still very volatile, but potentially a gold 2.0, if you like.
And is the value in is it the fully transparent? Is that kind of the concept, or fully traceable?
So the blockchain itself is fully transparent. Anyone can verify everything that is happening on the blockchain, which means that you don't have to trust one entity and not to print more of it or something like that, because it's all in the software, and anyone can verify how many Bitcoins are outstanding, how many more Bitcoins will be minted, and there's a hard cap on the supply of Bitcoin. So that's a very important concept, that openness and transparency, if you like.
So it's a big change to something like, at the moment, if we want to transfer for an investment in the US, we have to use an intermediate or one bank that then uses two other banks just to get cash to arrive.
That's right.
So it's
but it's also that scarcity, meaning we can trust that no one else will print more of it, and I think that's why you have seen much interest in Bitcoin specifically lately, because we have seen all this central bank easing and money printing going around in the world, especially since COVID started. And I think there are a lot of investors these days that believe that we will see a lot of inflation in the coming years, and Bitcoin is potentially a hedge for that.
So if we were saying this is a big theme, Henrik and Michael, and said, well, if I got you to dream and say in 15 years time, and this has continued on this rapid rise of being used in not just for currency but day-to-day life, what's the opportunity set in this in having digital assets? Can you see it being used for all means of transactions, like and stamping of ownership? Could it be used for, I saw the ASX recently is going to use their new registry system is going to use some form of blockchain?
Michael, do you want to take that one?
Yeah. So I think
You don't have to be right. It's just
no,
it's just kind of saying, well, it's been so rapid.
Yeah.
Where could it go? Is it could it actually transform everything we do? Not saying that that's going to create a huge amount of money, but transaction. Zoom, for example, Zoom 12 months ago we didn't use, and now we use it every day.
Yeah, look, I think to kind of talk in a bit of a bigger picture analogy is a world moving to digital from analog, right? So that's what blockchain promises. And sure, there'll be a lot of efficiency gain across many industries and many things. Now, blockchain and crypto, or blockchain and Bitcoin, the maximalists will say, yeah, well, the only true, real, strong security blockchain is one that's tied to Bitcoin, right? There's that incentive structure of a consensus that's making sure that that blockchain doesn't get somehow corrupted, right? Not every blockchain probably needs that kind of security, right? But many will, and many others will find some other, so there are other blockchains or other base layers, and Henrik can probably talk in more detail to these, that have features that are better than Bitcoin for their use case. So for example, in Bitcoin right now, there's I guess the time that takes for a block to get, verified is much longer than say on Ethereum. And so thus there's some efficiency pickup, for different use cases on different, I guess, base layer technology. But most importantly, I think from a bigger picture standpoint is that, yeah, there's a lot of use cases that will make the world completely different and much more efficient. And probably some of the lowest hanging fruit are in some of the most inefficient industries out there, and the ones that have a lot of cost and middlemen. And probably the biggest one is the financial industry. Right? So anything from either portfolio management, administration services, going through brokers, exchanges, bid-ask spreads, times for settlement, all those things can be custody. All those things can be improved. Other things too. There's a big swell in terms of ESG. Blockchain technology. I was on a call recently where carbon credits, right? So the focus around carbon. So that idea of having some kind of carbon credit that's verifiable, that can't be double counted, is a perfect use case for some kind of blockchain that's highly secure and consensus driven and not to be able to be corrupted. So that makes a very good use case for having something that would have some kind of digital asset attached or cryptocurrency that is the incentive to make sure that there's security around that blockchain.
So when you say it can't be corrupted, is it just because it hasn't been corrupted yet, or is it totally foolproof?
Oh, well, I mean, Henrik could probably talk more in detail, but I've watched like the MIT seminars on Bitcoin specifically, and I guess the word that they use is highly infeasible, right? I mean, it's not impossible to be corrupted, but the probabilities are like so so small that they say it's unfeasible that it'll ever be broken. And the way that's the beauty of the way that design was. Now that blockchain currently could be argued to be the most secure, right? And by design, as the price increases, the incentive is to keep on building security around that blockchain. Other blockchains are maybe not as secure, but they have more use case to be able to be quicker or faster or cheaper to operate on. So I think that you're going to see new developments and things. Well, there's always trade-offs in terms of all different characteristics that you want for a particular chain.
Maybe Henrik could expand on some of the use cases. So everyone thinks, it says currency, as we put in our notes beforehand, currency is not the right word necessarily. And every asset or every coin can be used for a different purpose. They don't all want to be used to buy pizza or whatever it happens to be. Have you got a couple of examples that listeners might like?
Yeah, for sure. I mean, I just want to get back first to that corruptible piece there, and I think the Bitcoin blockchain is certainly very, very secure, and it's kind of been running very securely for 12 years now. And Ethereum is a secure blockchain as well. But I think the key here is that we can all verify if it's been corrupted or not. So it's all kind of open to the world, and anyone can, for example, run a Bitcoin node on your laptop, and you can all verify all the transactions going back to the very first transaction in January of 2009 on your laptop, and it will take a couple of days to verify all the transactions that have taken place from that. But there are thousands and thousands of these nodes running, and anyone can kind of check the integrity of the system.
It'd probably take years for a bank to do that, wouldn't it? To verify.
Yeah, it's not transparent, right? I cannot check the kind of verify the transactions going on a private ledger in some of the banks or something like that, right? So that's a very kind of a paradigm shift when it comes to financial infrastructure. And there is one kind of bigger potential here, which is the actual building of a new financial infrastructure using blockchain technology. So with the introduction of Ethereum, which was the next big innovation after Bitcoin, we got something called smart contracts, which are snippets of code that run on the Ethereum vault computer, which is the Ethereum blockchain. And that enables us to create financial contracts that are coded. So it's basically replacing financial institutions, banks, if you like, with software, and a very specific software in this case, which is blockchain technology. And this can only be done with blockchain technology. So this could really be, I think if you look out 5-10 years, this could be a paradigm shift when it comes to the introduction of a new financial infrastructure, basically running on the rails of blockchain. One simple application, as an example, is stable coins. So with stable coins, you have crypto assets that are pegged to, for example, the US dollar or the Australian dollar, and you can run them on the Ethereum blockchain, which means that they're super fast. You can send these stable coins to anyone in the world immediately. You can know that they arrived, and you don't have to rely on a bank to
Western
do those
Union or
transactions, right? So that's a very simple, kind of the most simple application of this new financial paradigm that we call decentralized finance, or DeFi. And then you can do more complicated things as well. So we've seen a lot of uptake in the use of DeFi when it comes to lending, borrowing, trading, derivatives. And that's happening right now. We have seen that kind of market expand by 50 times, so 5,000% in the last 12 months. And a lot of the top VCs in the world that are investing in this space, they're heavily focused on that DeFi, or decentralized finance market currently.
Yeah, I think a good analogy there is, the difference between fintech and DeFi, right? So we recently had a educational seminar where someone had made the comment that, fintech are applications that are working around like the current traditional legacy banking system. A centralized, still working around all the problems of legacy systems and centralized ledgers and not an open architecture, where DeFi is kind of fintech on steroids because it's working in an open architecture.
So that makes the user interface easier, where you're basically breaking it all down.
In terms of the speed of overcoming any hurdle right, or any innovation is now wide open, and that's why you're seeing this exponential growth in terms of, applications being made. The other analogy is it's VC, but it's liquid VC. That entire category of projects that are going on.
I think that's a really good point there, Michael. The first point you made there with the open innovation. I think for the first time in human history, we see financial innovation on a global scale thanks to DeFi. So if you look at fintech, it's using the old banking rails, but maybe they do mobile only or something like that. It's another interface to the old financial rails. This is a completely new financial infrastructure that is based on software. And since it's software based, there is kind of a permissionless innovation going on. So anyone, anywhere in the world can write these smart contracts, publish it to the world, and anyone can start using them kind of in a permissionless way. So that has spurred this kind of explosion in innovation around DeFi.
So would smart contracts have, applications in property settlements and these sort of things, where I'm assuming it's basically if this happens, this automatically happens. So you meet certain requirements, and then the contract's met, and your currency or your money is distributed.
Am
I the old world?
There's certainly a lot of people that are trying to apply this technology to all kind of things like property settlements, supply chains, and other things, right? It becomes quite difficult kind of to secure something on a blockchain that is not digital, right? Because the only thing you can enforce on a blockchain is something that is natively digital, and real estate is a physical thing, so that you cannot secure something that is physical on a digital blockchain, right? It would be impossible, right? So Bitcoin is purely digital. It's different in that way from gold, right? Because gold is something physical, right? So you can only secure something on the blockchain that is purely digital. That's why one reason why financial contracts are so well suited to blockchain technology. So at Apollo, we focus a lot on investing in the DeFi space. We even, wrote our investment thesis around our investment philosophy before DeFi was a word, right? But we have all this time focused on financial applications because they are most of the time digital in nature. They are well defined, and they're very well suited to smart contracts. If you talk about real estate, it's kind of something in the real world which is really difficult, I think, to kind of apply this to.
So we thought about that. If we were to apply the opportunity for crypto into a business like ours, Drew and I are financial planners. We run Wattle Partners. We're in financial services. So do you think crypto or blockchain would have, in some of the activities we do, for example, undertaking due diligence on investments? Maybe not.
Share trading, bank transfers.
Definitely determining ownership. That's quite clear, and it seems to be progressing. Settling trades kind of makes sense.
Yeah, I mean, some of those areas, when it comes to kind of the more financial areas, kind of sending funds, right? There are some of the big payment companies that are now working to integrate with stable coins. So that might be what is underlying some of the transfers that you will do in the coming years.
Yep.
So it could be big payment companies, also MasterCard, Visa are looking to kind of integrate stable coins. So it's big, people might not even know that they're using blockchain technology when they use those kind of services. When it comes to share trading, there is a kind of a parallel financial world that is being built up using blockchain technology. And it's possible that, we could trade shares and other instruments using something like Ethereum as kind of the base layer. So it's definitely possible. And if that were to happen, a lot of the middlemen that you have today in that area when it comes to exchanges, etc., might be disrupted.
Yeah, there's a lot of talk at the moment about regulation of the industry? It does, from what we're discussing, it sounds like it's almost self-regulating. If everything's transparent, you can tell when it's corrupt. Do you seem to be ahead of everyone on in terms of your understanding of the sector? Is regulation coming? What does it even look like? Is it a regulatable asset?
I mean, certain parts of the industry is definitely regulated today, right? So, for example, when it comes to the crypto exchanges, the on and off ramps to crypto, they are regulated in Australia. They have been that for a couple of years now.
Yep.
Same thing in other regions of the world, right? So the US and Europe, etc. Will there be more regulation coming? Yeah, I think that's possible. There are, perhaps some regulation underway, for example, in the States, where they might require more kind of know your customer checks and things like that from exchanges when they send funds from the exchange or crypto. Would that be bad for the industry? Not necessarily. I think, especially since we are seeing this institutional adoption now, for many institutions looking at this space, they might actually welcome more regulation coming to the industry.
And do you see more opportunity? I know your history and your experiences in the currency part. Is the DeFi part where more of the scale is over the next decade?
That's certainly an area where we think we'll see most of the growth. So while we are bullish on Bitcoin and we think there's a lot of upside still in Bitcoin, if you compare Bitcoin to, for example, gold, there's still a long way to go. But we see bigger growth kind of in that DeFi area, and we think that's for the next 5 years, that's where we will continue to invest heavily in. So we run a diversified portfolio. We have Bitcoin, but apart from Bitcoin, I think DeFi is where most of the growth will come from.
So it seems like Bitcoin is gathering momentum and getting access to it is becoming easier and easier. As advisors, we've been asked about the asset class and getting exposure to it for a long time. I hear there's about to be some ETFs listed in the US and potentially in Australia that allows stock investors to invest into Bitcoin. So it seems like that momentum will continue. Where does it fit in portfolios, Michael? Can you give us some context around where, say, a retiree would put Bitcoin? Would they buy a coin, or would they buy the new ETF? Or Henrik, we'll allow Henrik to explain his fund. Can you just give us some perspective in terms of portfolio builds and where potentially an asset like this fits?
Sure. I think that, one, it's first, it's important to kind of distinguish between maybe Bitcoin and the broader asset class, right? Bitcoin being, if anything, it's almost funny, is being almost becoming the mature, boring asset in the class, if you will, right? But I think, the theme right now is this store of value or digital gold. From that standpoint, it's viewed currently as more of either a cash holding or a hedge for inflation, albeit one that's very highly volatile relative to traditional assets. I'm still in the camp that I think that it's correlating quite highly with technology, right? With high growth technology stocks, but probably does have that other use case as well. And I think over time, as volatility continues to diminish of Bitcoin, the store of value story will become more embedded, if you will. Where we've seen it being used, where I've seen it being used, yes, certainly people with that more growth story, they recognize the technology, and the technology of blockchain is here to stay, and that if anything, it's a very big high growth story.
Yep.
Other institutions have looked at it as, is it a levered kind of gold allocation? And so if I'm managing a currency bucket, do I have that part of that bucket? at a very small percentage of holding based on the volatility. I
So
think
it's a good question, isn't it? Because you could argue that in your defensive alts, in your defensive bucket, you have currency and some commodities like gold. So it kind of fits there. But then the vol is quite high at the moment. Might not always be like that, but the vol at the moment's high. So you'd automatically need to allocate it to kind of your growth alts down the bottom and where you put your portfolio hedges. So, it kind of fits two places.
It's truly diversified, right? Over long time periods, it's not really correlating with anything.
Yeah.
But I wouldn't have it in the portfolio, for example, as an equity hedge, because it still has that high correlation with a liquidity event or a risk-off environment that, for example, in March, it came off quite heavily, as did, the equity markets. Now, that might be very different on the next move, but
But it seems like the correlations change too, doesn't it? Over time, they've moved in and out of various asset classes. So, as you said, it's unhedged, uncorrelated, which is fine. It's a good portfolio hedge then.
Right. And so if I look at it a bit broader, if we're starting to look at DeFi and some other digital assets that are higher risk, higher return, I view them more as much more kind of tech VC kind of allocations, where they're much earlier in terms of their S curve than, say, Bitcoin. And so you don't need to hold as much as them in a portfolio. Or if you're holding in the case of a crypto fund like Henrik, they can make up, a smaller portion of the portfolio, because of the higher risk, they still deliver a much higher expected rate of return. So I wouldn't classify them all the same. And certainly they all have, I guess, different maturities, different volatilities. I think that kind of drives the underlying thing of how do you get access to this. Beyond Bitcoin, and a Bitcoin ETF, I think, will be valuable for people. If it's an easy access point for a small allocation into a portfolio, it makes a lot of sense. But for people who want to have maybe where Bitcoin's return series of 10,000%, kind of for the last whatever length of period it is, you're probably not going to get that in Bitcoin going forward. But these other assets, these new projects and these new opportunities, that growth rate is still there, but the risk is, directly associated with that as well.
Sorry, go ahead.
So a portfolio of crypto assets managed by an active manager who's really looking at the token economics of each of these deals and what their use case and what their qualities are, is absolutely critical if you want to be investing in this asset class.
And why is volatility so high? Is that just the nature of supply and supply and demand, obviously, but there's limited supply. Is that what drives the daily volatility? And there's more and more players entering it and exiting it. Is that?
Yeah, look, it's still a relatively small asset class, and it's still primarily driven by sentiment, right?
Yeah.
So that's part and parcel of a very illiquid asset, a relatively illiquid asset class. I think the other thing is it's daily priced VC in many ways. If I don't know if you've been in any VC funds, but if they were daily priced, they'd be volatile as hell.
If residential property was, it would be too. So
that's a trade-off. You've got daily liquidity, but you're going to have to wear volatility, certainly here in this brand class at the onset.
It's interesting because it's somewhere between a public market asset and a private market asset, because I assume something that Henrik and Apollo and you guys are kind of selling in a way is access to a diversified portfolio that still has a very unique knowledge to it versus public markets where knowledge is available on a Bloomberg terminal for a subscription fee. So for anyone that's listening, Drew and I, essentially anyone that's been interested in crypto, we've suggested Apollo, because it is a broad fund. It is exposed to a lot of different currencies, and Henrik is been, one of the most experienced managers in this space. Not saying that the fund isn't without risk or isn't volatile, but our declaring our hand is that we've sent people your way because of that. Fits in that growth alts bucket down the bottom. It's a diversified portfolio of different things. We liked that there's some custody. You've got a professional custody group owning some of these coins, not all of them, but owning some of them. We've all heard stories before about someone with a hard drive of $6 million worth of crypto that they threw into a local bin that they can't get back. So there's elements that you're doing is really interesting, and we've been a supporter. It's just it grows every day, and the knowledge that you need grows every day, and we don't have time. And so it's one of those areas that we would rather use a professional manager than trying to pick another coin, even though clients call us every day and tell us about a new coin that's securitized by TVs or something. Yeah, I mean, that's where it fits. We think it fits in portfolios and how we kind of approach it. So do you want to give us a bit more color about your fund, Henrik? How many coins are in there? And is your biggest holding Bitcoin and then it scales down?
Yeah, that's right. So Bitcoin is certainly one of the biggest holders, and Ethereum is in there as well at the top. Apart from that, we have, as I said a couple of times, a lot of focus on DeFi assets. I think what you said, Jamie, is really right. So it's really correct. So it's a very inefficient market. So if you're a professional manager in the crypto market, there is great alpha to be had, if you like. There's great opportunities for returns that are outsized returns versus the market. So I think, going back to the discussion we had about Bitcoin and other crypto assets out there, I think if you only buy one crypto, sure, you can buy Bitcoin, right? And then you have to custody that somehow. There is no ETF currently, but my opinion is that the space is bigger than just Bitcoin. I don't see a future where there is only Bitcoin. It's definitely much bigger than just Bitcoin. And like Michael said before, the growth is much higher in some of the other areas of the market, even though we are still positive about Bitcoin. So if you like that more diversified exposure to the crypto ecosystem, if you like, across the crypto space, then you need a broad portfolio, and what does not work is a passive holding of, say, the top 10 or top 20 crypto assets out there. That has proven itself to be very inefficient and kind of underperforming. Yes. So you need to have an active allocation, meaning an active manager in the space if you want that broad exposure, and I think that's where we come in. So we provide that with Apollo Capital. We have an actively managed, diversified portfolio to the crypto ecosystem.
And what's the index that we should be looking at to kind of get an idea of how crypto markets? Is there an index that you can follow and plot?
There are a few indices. We like to. We've been using since we started an index of the top 20 crypto assets. We're also Eureka Hedge, which is one of the providers of different indices. They have a crypto fund index that we like to compare ourselves to as well.
Sure. And you've recently started a new fund as well, Henrik. Do you want to just give us an overview of what that fund does?
Yeah, that's right. So we started a market neutral fund as well. So our flagship fund, if you like, the Apollo Capital Fund, is this diversified exposure to the crypto market. And last year we launched the Apollo Capital Opportunities Fund, which is the market neutral exposure to the crypto market. So very different risk return profile in that fund. That fund targets annual return after fees of 30 to 50%. So I think a very excellent potential return there without taking a price exposure to crypto assets. So, one day, we might enter another bear market in crypto markets, or maybe you have an investor that are not
so market neutral, you mean like a beta or a zero? So
that's
essentially
right.
it's got no market exposure going up or down. It's just
that's right. So
positions.
we use kind of the inefficiencies in the crypto market to get
Sure.
those kind of returns.
Is that like
very high.
lending secured by crypto or lending secured by currency? Is that part of it?
Yeah, so we use we are very active in the DeFi market. We provide liquidity to something called decentralized exchanges, for example, where you can earn a very high yield for doing that. So that's certainly a major part of that portfolio currently. But there are other strategies as well in our toolbox, if you like.
And how do these new coins? Probably should have asked earlier, but how do these new coins get created? Is it like an IPO, or is it a group of people in a room coming together about a certain amount of coins and a certain amount of tech, and it should look like this? Or how do they get conceived?
Yeah, a group of developers really all around the world that are working on creating new projects in this space. 3 years ago, we heard about ICOs. Those were new coins that were sold to the retail market. That market was more or less shut down by the regulators. So these days, that early stage funding is done through something called a SAFT, which is a piece of security sold to accredited or wholesale investors or institutional investors like ourselves, where we can get access to this early stage deals, kind of seed investing. The path to liquidity is very fast in those early stage deals. So the path to liquidity might be months or a couple of years, so very different from traditional VC investing.
And that's a part you invest in them, Henrik?
That's right. So we're actively doing that as well. So we invest in both early stage deals and secondary markets.
Yeah, great.
I think that's a really kind of underappreciated, or maybe not spoken about enough about the fund for Apollo is, Henrik probably doesn't want to toot his own horn, but just like VC funds, where let's say a new project team, they seek credibility and a network effect by the people that they get to invest into their project.
Mm.
And Henrik is one of those people that's sought out, certainly in this part of the world, for that credibility, which actually investors in the fund get access to that kind of inside pre-public deal flow. If they're very good projects, you and I on our own, we couldn't get access to that, right?
So Henrik's deal flow goes into the fund?
Yeah, that's right. So we invest actively in, we've done 3 or 4 deals, I think, year to date. So we're quite selective. We look at a lot of deals, but we are very focused on kind of our area investments, that the DeFi focused, the team behind these new projects, and so on. So we're being quite selective. The risk is higher the earlier you invest, but the potential returns are really great as well.
And what kind of total capital do you think you can run, Henrik, or does it change by the day as the market grows? Is your fund capped at say 100 million, or you could potentially, as the market grows, you could get to a couple $2 billion and still run it efficiently?
Yeah, I think the main fund, if you can call it that, can probably handle $1 billion in today's market. It's a very liquid market. Yep. The new fund, the opportunities fund, the market neutral fund that we talked briefly about, the cap there will be much lower. So sure. That might be capped at 50 to 100 million.
Yep. Okay. Well, I think it's nearly time up for us, but it's definitely a theme that we'll keep on at our investment committee, and one that we'll watch very closely, and probably more knowledge is required by me anyway. But really appreciate talking to both you, Michael, and you, Henrik, giving up your time and going through your fund and the opportunity set and the big theme that's going to play out over the next 10 years, and hopefully can welcome you back soon to talk a little bit deeper. So thanks very much on behalf of Drew and I and the team at Wattle Partners.
Thanks. You.
Great, guys. Thank you.